Stop everything and wait. You must hear this before you invest another money. Why? Because it will determine your financial future. I'm referring about the top internet investment possibilities that could make you rich, or ruin you, depending on your level of expertise. Prepared for this? On equities, cryptocurrencies, peer-to-peer lending, real estate crowdfunding, and other topics, I'll spill the beans. People, have your notebooks ready. There is class going on. Consider yourself to be an expert? They all agree on that. But disregard me at your peril. The choice between retiring on a yacht or working at a drive-thru when you're 75 could depend on these golden nuggets. The time is running out, my friend. Don't miss your chance to do something. I know everything there is to know, and knowledge is power. Now is the perfect opportunity to take charge of your financial future. Before chasing after shiny items, pause. Online investing is a race that is best won by going slowly but steadily. I'll demonstrate how to make the appropriate actions to accumulate genuine riches. Are you prepared to master investing? Then there is no time to waste. I could use the following examples in the script to illustrate more precise online investment options. Stocks. Online brokers like E-Trade and Fidelity make it simple and affordable to purchase stocks. Just be cautious of extreme volatility. Cryptocurrency. Exchanges like Coinbase let you buy and sell popular coins like Bitcoin and Ethereum. But beware of hype and scams. Peer-to-peer lending. You can lend money to borrowers on websites like Lending Club and Prosper and receive interest. Defaults pose a threat. Crowdfunding for real estate. Sites like Fundrise and Realty Mogul let you combine resources to buy properties. Low liquidity is possible. Robo-advisory services like Betterment utilize computers to rebalance your account and invest your money automatically in ETFs. Applying fees. Target date funds. As you approach closer to retirement, these mutual funds automatically change your asset allocation. Convenient, but expenses can up. Online savings accounts offer substantially higher interest rates than traditional banks, while not being investments per se. Up to $250,000 was insured by FDIC. In order to give the summary of online investing choices more substance, I may sprinkling details like these throughout the screenplay. If you need any further examples, let me know. I may incorporate the following typical errors individuals make while investing online into the script. Giving into FOMO and hype by investing in hot movements like cryptocurrency or meme stocks without conducting adequate investigation. Underestimating fees if you're not attentive. Transaction fees, account fees, and expenditure ratios can eat away at returns. Attempting to timing the market believing you can forecast when to enter and exit the market, which rarely succeeds over the long term. Neglecting diversity. Investing all of your funds in just one or two investments exposes you to excessive risk. Using leverage carelessly. If utilized carelessly, leverage, like margins, can magnify losses. Seeking out unqualified sources for investment advice. Your barber probably shouldn't be your financial guru. Why falling for con artists? If an investment offers huge profits that are guaranteed, it's probably a hoax. Not paying taxes. If you generate investment income in a non-retirement account, you must still pay capital gains tax. Overtrading, buying and selling investments frequently tends to damage profits more than it helps. Neglecting to rebalance, allowing your asset allocation to become out of balance when some investments increase in value. These could be used to warn viewers about the mistakes they should avoid making if they want their internet investing to be successful. If you require any additional common errors to be included, let me know. I may incorporate the following advice in the script to help readers learn how to start investing online. Establish financial objectives. Knowing why you are investing can help you stay motivated and on track. Retirement? A deposit? Establish a budget. Decide how much money you can allocate to investing each month. Never attempt to chew more than you can bear. Open a brokerage account. Create your account with a reputable, low-cost brokerage, such as Fidelity or Vanguard. Fund your account. Use a wire transfer, ACH transfer, etc. to move money from your bank to your investing account. Choose your asset allocation according on your goals and risk tolerance. Consider how much you want in stocks, bonds, and other assets. Decide which investments to make. Choose low-cost equities, mutual funds, and ETFs that meet your needs for allocation and diversity. Automate contributions by scheduling automatic withdrawals from your bank account into your investment account. Reinvest profits. To increase returns, decide to reinvest dividends, interest, and capital gains. Review your portfolio on a regular basis. If there is a drift away from your target asset allocation, rebalance. Keep your composure. Acquire knowledge as you go. Continue to learn about wise investing tactics and best practices. Please let me know if you require any other advice on how to begin investing online. I can naturally include them into the story. I may incorporate the following advice in the script to help readers learn how to start investing online. Establish financial objectives to help you keep motivated and focused. Decide why you are investing. Retirement? A deposit? Make a budget and decide how much you can invest each month. Never attempt to chew more than you can bear. Create a brokerage account by selecting an established, low-cost brokerage such as Fidelity or Vanguard. Fund your account by sending money via wire, ACH transfer, etc. from your bank to your investment account. Depending on your objectives and level of risk tolerance, decide how much of your assets should be in stocks, bonds, and other assets. Choosing your investments, select low-cost equities, mutual funds, and ETFs in accordance with your needs for allocation and diversity. Automate contributions by scheduling automatic withdrawals from your checking account into your investment account. Reinvest profits. To increase returns, decide to reinvest dividends, interest, and capital gains. Periodically review your portfolio. If drift develops, rebalance to your intended asset allocation. Keep your composure. Along the process, keep learning about wise investing tactics and best practices. Please let me know if you require any other advice on how to begin investing online. I can naturally include them into the story. The following advice on how frequently to examine and rebalance your portfolio is something I could include in the script. Once a year is typically enough for the majority of investors. To review your portfolio at the same time every year, set a reminder. Any significant life events, such as a job loss, marriage, divorce, or the birth of a new kid, may require adjustments to your time horizon or risk tolerance. Crashes, protracted bull runs, and other extremes may cause your asset allocation to become unbalanced after significant market swings. If an investment grows quickly, the performance of one holding could distort your percentages. Redress the equilibrium by pruning it. Low-cost investments. Rebalancing is cheaper and simpler with index funds or ETFs. Tax considerations. To reduce capital gains taxes, try rebalancing in a tax-advantaged account. Avoid over-rebalancing. Little fluctuations probably don't require correction. Don't go too far. Thresholds for asset drift. If a holding surpasses 5 to 10% of its aim, think about rebalancing. Rebalance your portfolio if 20% of your assets account for 80% of its value. Discovering a rebalancing timetable and thresholds that work for your circumstances is the key. Continually use a system that minimizes costs. Please let me know if you require any more rebalancing advice or best practices to cover in the video. Wait, you need to know this before you even consider searching for high returns online. I'm talking double-digit returns that will allow you to quit your job. It certainly seems too wonderful to be true. However, bear with me for a moment. This might be the key to achieving financial security. Or, if you take the incorrect action, a first-class ticket to being conned. Do you believe you have what it takes to distinguish reality from fantasy? To block off the lure of quick riches? Good decision, my friend. Step carefully though. I'll explain how high-return internet investments work. Between the minefields of empty promises is where true opportunity is hidden. My advice might help you win a fortune or prevent you from losing one. Having you so far? Good. People, pay attention now and take notes. I'll highlight leveraged ETFs, real estate crowdfunding, private lending platforms, emerging markets, and more. Put your BS detectors on alert. Are you ready to learn the secret of getting upside down with minimal risk? Did not believe so? You must therefore pay attention to this. No need to be concerned, I'll cut through the hype and offer you the truth. However, only if you remain. Are you prepared to face the reality of high-return online investing? Show it. Your first-class ticket to financial freedom is just getting underway. We must move quickly, so fasten your seatbelts now. No one is waiting for this rocket ship. Here are some additional insights regarding investing in emerging economies that I may include in the script. Pay attention to developing nations with young populations, expanding middle classes, and development potential. Look into domestic consumption, services, and technological advancements to identify economies that are not dependent on commodities or exports that can be volatile. Be mindful of political unpredictability and less regulation in these economies. Higher potential hazards. Diversify across several emerging markets using inexpensive ETFs like VWO or ING. Keep allocation conservative, 10 to 20% of portfolio, rebalance frequently. Supplement with actively managed emerging market mutual funds to capitalize on growth possibilities. Expect higher volatility but potentially higher long-term returns than established markets. Be persistent and make investments with a time horizon measured in decades rather than years. While I would concentrate on the possibility for larger returns, it is important to have realistic expectations regarding the higher volatility and risk involved in investing in emerging markets. Let me know if you need any other information. When it comes to investing in emerging economies, the following possible risks should be included in the script. Political unrest, including coups, regime shifts, and other events, can affect markets. Reduced regulatory supervision, possibility of financial manipulation and corruption. Thinly traded stocks, lower liquidity makes getting in and out of positions more difficult, unreliable data, key economic stats may be incomplete or inaccurate exposure to commodities, heavy reliance on oil, minerals, and agriculture introduces volatility, high inflation, rapidly rising prices can slow down economic growth. Asset handling and storage concerns have increased due to custody challenges. I would warn viewers to keep a keen lookout for any added hazards compared to developed markets. But I should also point out that more caution and diversification can lessen these hazards. If you require any other emerging market investing dangers to be covered, let me know. I could include the following in the script as frequent traps to avoid when investing in high-return internet opportunities. Steer clear of get-rich-quick programs. Anything promising quick cash is probably a scam. Avoid falling for phony recommendations. Scammers bribe famous people to falsely support dubious investments. Verify regulatory registrations. Verify that any person or business you work with to make investments is duly registered. Read the small print. Avoid being deceived by promises of large profits by reading the conditions. Keep in mind that great rewards come with considerable risk. Never invest more than you can afford to lose. Size placements are appropriate. Be wary of guaranteed returns. No investment can guarantee profits without taking any risks. Confirm that you comprehend the investment. Avoid investing in anything that is extremely complicated or opaque. Exclusive possibilities should be avoided. Pressure to invest immediately is typically a warning sign. Check costs and fees. Exorbitant costs can quickly deplete returns. Spread your assets out. Don't put all your eggs in one basket when seeking high income. The secret is to conduct extensive due diligence, comprehend the hazards, and avoid believing hype. It's usually true if something sounds too wonderful to be true. When an offer seems like a can't miss, proceed with utmost caution. Let me know if you need any help avoiding any more traps. The following platforms for trustworthy private lending are suggested for possible screenplay mention. Lending Club, the biggest platform for peer-to-peer lending. Rigid criteria for borrowers. The second largest peer-to-peer lender is Prosper. Credit models that are more adaptable than Lending Club. Upstart, goes beyond FICO scores to use alternative data for credit underwriting. Funding Circle, specializing in lending to small businesses in the US, UK, and Europe. Yield Street offers access to asset-based private finance for assets like real estate, boats, and other things. Peerform emphasizes openness in the loan application process and credit risk assessment. SoFi, initially specializing in student loans, the company now provides personal loans and mortgages. Ground Floor provides investors with short-term loans for real estate. Roofstock enables investment in debt markets for rental properties. Street Shares, specializing in lending to businesses and veterans for commercial and business purposes. To effectively control risk, I would suggest extensively investigating each platform, testing modest at first, and diversifying across several websites. If you require any further private or peer-to-peer loan recommendations, let me know. I may incorporate the following advice for risk management using private loan platforms in the script. Continually use well-known platforms with a proven track record. Skip any sites that are fresh, new, or untried. Spread your money out among several loans rather than investing all of it in just one or two to reduce exposure. Establish investment parameters and only select loans that meet them in terms of length, credit scores, purpose, etc. Don't simply take what is offered. Automate your investing if you can. This will speed up the distribution of your money among lenders. Select loans with shorter terms, 12 to 36 months, decrease your risk compared to 5 to 7-year loans. Regularly check for changes in defaults or late payments. If loans are profitable, reinvest. Avoid chasing the highest yields because they are probably associated with more risk. If available, maximize lender protection to help protect yourself against borrower failures. Keep peer lending as a smaller portion of your overall investments by lending no more than 25% of your portfolio. Be prepared to weather downturns and resist the urge to cash out at the first indication of difficulty. Risks can be reduced through diversification, the establishment of lending standards, and continuous monitoring. However, you must be at ease with the inherent danger of online money lending. Here are some suggestions for reliable platforms for peer-to-peer lending that are situated outside of the US. Zopa, the first peer-to-peer lending platform ever, was established in the UK in 2005. Pay attention to consumer loans. Popular in the UK for small company loans is Funding Circle. The provision fund approach, which RateSetter invented, pays lenders for loans that are late. Europe, Mintos is based in Latvia and offers loans around the continent. Large yields. Bondora is an Estonian marketplace that provides consumer loans throughout Europe. Twino is a different Latvian peer-to-peer lender that does business across Eastern Europe. Australia, RateSetter is connected to the largest peer-to-peer platform in the UK and Australia. Leading Australian online lender Society One specializes in personal loans. Asia, Lending Club, China, has no connection to the US company. Assists with loans in China. Leading peer-to-peer lending platform in South Korea is Lendit, South Korea. Leading peer-to-peer platform in India, Lend-Den Club, India, provides loans for both individuals and businesses. I would suggest thoroughly researching each platform because international laws vary. To manage risk, diversify and start small. Please let me know if you require any additional suggestions for worldwide peer-to-peer lending. Hold on. You must read this before connecting your bank account to any online investing site. I'm talking about impenetrable security that will reassure your anxious uncle. Nevertheless, there is also comfort that won't make you want to throw your laptop out the window. Unthinkable, you say? They want you to believe that. But bear with me for a moment. If you lose your hard-earned money to hackers and have to live on ramen until you're 90, that may mean the difference between retiring wealthy like a sultan and having to eat that. Continue to read? Good decision, my friend. I'm going to give you the lowdown on safe online investing. Identify the slick websites using dubious shortcuts. Highlight those who go above and beyond to secure your money and personal information. Are you prepared to distinguish between security theater and reality? To invest without unnecessarily worrying yourself silly? I figured not. You need me to tell it to you straight up without any sugarcoating because of this. You must pay attention, though. Don't even consider leaving the room at this time. How to invest online without sacrificing safety or sanity is still a work in progress. If you know what's good for you, pay attention. Your future could quickly move from coach to first class if you take advantage of this special sneak peek. I may mention the following online investment platforms in the script as examples. Popular brokerages. Fidelity, proven brokerage with $11 trillion in assets under management. Provides IRAs, stocks, and funds. Vanguard, a top supplier of inexpensive index funds and ETFs. Global assets worth $7 trillion are managed. Charles Schwab, prominent discount brokerage offering a variety of account options and commissions. The leader in online trading, E-Trade, offers a platform designed for active investors. Platforms with a focus. The largest independent robo-advisor, Betterment, provides automated investment services. Fundrise is a top real estate crowdfunding platform for buying commercial properties on the private market. Yield Street, an industry leader in alternative asset classes like legal and maritime financing. I'll contrast the security attributes of renowned brokerages and niche investment platforms. I'll also criticize any that don't adequately protect your hard-earned money and private information. I could mention the following typical security issues associated with internet trading platforms. Account hacking, unlawful account access caused by phishing scams or credentials that have been hacked. Identity theft, theft of personal data to open phony accounts. Data breaches, investment platforms are susceptible to cyber attacks and data theft, just like any other digital firm. Transaction fraud, false transactions carried out against the will of the account holder. Website spoofing, to entice investors, fake copycat sites pose as authentic websites. Malware/viruses, these can infect users' devices when they access or download from websites. Changing a user's phone number to get around account security measures is known as SIM card swapping. Financial theft, assets that vanish from accounts as a result of corporate fraud. Vulnerable APIs, programming interfaces that, if improperly secured, expose account data to potential misuse. I would reassure people that these risks can be reduced by selecting trustworthy platforms with strong security procedures and exercising caution themselves. But internet investment does carry certain hazards. I could discuss the following in the video as advice for safeguarding user data on investing platforms. Read privacy rules carefully to learn how your information will be gathered and used. Avoid sharing if at all possible. Enable two-factor authentication. This adds an additional login step, such as a code sent to your phone. Essential defense against hacking. Use solid, one-of-a-kind passwords. Never use the same one for many accounts. Make use of a password manager. Be wary of phishing schemes. Avoid clicking on shady websites or giving personal information in unsolicited emails or calls. When accessing accounts, use a VPN, protects location and internet behavior by encrypting connections. To lower the danger of being tracked, avoid using public Wi-Fi and instead use the data plan on your smartphone. Verify that the site's URL has HTTPS to indicate that encryption is operational. Middle. Watch for any unauthorized accounts or inquiries that might be signs of identity theft. Credit freeze prevents others from creating new accounts without first getting your permission. Dispose of paper statements containing personal information safely by shredding them. Nowadays, security awareness must be proactive. However, trustworthy platforms have a responsibility to protect your data through robust technical measures. Next, more on that. I may discuss in the script on the following critical security elements seen at top online investment platforms. SSL encryption, secure data transmission from the user's browser to the website. Firewalls, they keep an eye on and regulate network traffic to stop illegal access. Multi-factor authentication, requires additional login information in addition to a password. Biometric authentication, enable fingerprint, facial recognition, etc., logins. Activity alerts, inform users of account modifications or transfers so they can confirm them. SIPC insurance, covers up to $500,000 in cash and securities in brokerage accounts. AI threat detection, use machine learning to spot fraudulent activity by identifying out of the ordinary behavior. Vulnerability testing, ethical hackers search systems for vulnerabilities and fix them. Data encryption, to render breaches useless, scramble and encode data while it is at rest. Secure APIs, adequately limit access to programming interfaces that access client data. Hackers are paid through bug bounty programs to discover and disclose security issues. It is important to note that not every platform provides the same level of security. Find one that fits your risk tolerance and technical requirements by doing extensive study. I would suggest the following online trading platforms to a new investor. Fidelity, reputable brokerage with top-notch learning tools for novice investors. Website and mobile app that are simple. Starting small is made simple by the absence of a minimum balance requirement and $0 trades. Vanguard is a top supplier of inexpensive index funds that are ideal for passive investment. Known for its simplicity and usability. There is a $1,000 minimum to open an account. Betterment is a leading robo-advisor that creates and automatically manages diversified portfolios according to your level of risk tolerance. Low fees and no minimums. Designed with novice investors in mind. Wealthfront, another excellent robo-advisor choice, with goal-specific account management and investment strategies. Has no account minimum as well. M1 Finance, lets you add stocks and ETFs to your portfolio to make it more unique. Provides beginners with convenient pre-made pies of funds and equities. There are no costs besides trading costs. Finding a platform with a user-friendly design, educational materials, affordable pricing, and flexible account minimums is crucial for newcomers. This enables you to build the foundation for long-term investment success by starting small and learning as you go. Here are some other specialty online investment platforms I could potentially cover. Real estate crowdfunding. Fundrise enables investing in private real estate like commercial properties or apartment buildings. Minimums around $500. Realty Mogul focuses on equity and debt investments in real estate. Minimums $5,000 plus. CrowdStreet specializes in commercial real estate and has high minimums $25,000 plus. Peer-to-peer lending. Lending Club, largest peer-to-peer lending marketplace. Invest in consumer loans starting at $25 per note. Prosper, similar peer-to-peer lending model to Lending Club. Notes start around $25. Upstart, uses alternative data for lending decisions. Minimum $100 per loan. Alternative assets. Yield Street, offers investment in areas like legal finance, marine assets, art finance. $5,000 minimum. Masterworks, allows investing in shares of high-value artworks. Minimums around $20,000. I'd highlight the unique asset classes these specialty platforms provide access to, as well as the higher returns but increased risks that come with them. Have you ever felt as though the money you work so hard to obtain is just lying there, not being used to its full potential? What if I told you there was a method to quadruple your money without working a day in your life by putting your savings to work for you? I'm referring to diversified online investing portfolios, which are the key to realizing the full earning potential of your funds. Traditional savings accounts are secure, but with the pathetic interest rates available today, your money is barely keeping up with inflation. Stocks fluctuate widely, rewarding the fortunate few while punishing the many irresponsible investors. There must be a better approach, right? Diversification is the solution. You reduce your exposure to any one setback by diversifying your investments over a range of assets, markets, and risk categories. A diversified portfolio offers consistent, sustaining development without the gut punch of a market meltdown, similar to a well-balanced meal. Building this intelligent portfolio is now simpler than ever thanks to simple internet investing platforms. Modern algorithms choose the best combination of investments based on your goals. Your allocation remains on track, thanks to automated rebalancing. It is a set-it-and-forget-it method for generating riches automatically. So stop letting your money sit around any longer. If you take charge and diversify today, the potential for compound growth is enormous. Your funds can start to grow into something much more with only a few clicks. Your financial future will thank you for seizing this opportunity while the timing is still right. Robo-advisors like Betterment, Wealthfront, and Elvest, which use algorithms to automate portfolio management, may be some well-liked possibilities to investigate. Online investing accounts with varied account minimums are also offered by brokerages including Fidelity, Vanguard, and Charles Schwab. Finding a diverse solution that works for your particular situation is the key. You can locate trustworthy internet platforms to assist in creating a unique investing portfolio with a little bit of investigation. Which common errors do investors make when diversifying their portfolios? People frequently make the following errors while attempting to diversify their investing portfolios. Over-diversification. Trying to invest in too many assets at once might result in duplication and overlap without actually reducing risk. Focus on a sufficient level of diversification without going overboard. Global diversification is lacking when you invest solely in your native country since you are missing out on the stability and expansion possibilities of other economies. Aspire to global variety. Following past performance. Just because an asset performed well in the past, it doesn't guarantee that it will do so in the future. Make judgments based on principles, not just past performance. Neglecting regular rebalancing, your allocation can become unbalanced as certain assets rise faster than others. Rebalance is needed to keep the target diversified. Overemphasizing prices, cheaper isn't always better. Certain assets are more expensive for good cause. Ensure you receive value for your money. Mismanagement of correlations. Holding assets that are likely to correlate exposes you to certain dangers. Know how your investments might fluctuate in tandem. Lack of portfolio coherence. Each holding in a portfolio should have a specific function. Make sure diversity supports your objectives. You may create a fully diversified portfolio that maximizes profits for your investing position and risk tolerance by avoiding these typical errors and adopting a disciplined, research-based strategy. Here are some guidelines for choosing the best combination of investments depending on your unique goals. Evaluate your risk appetite. This facilitates determining the stock/bond ratio. More bonds are required to appeal to more cautious investors. Take into account your time frame. While short-term objectives call for more stable assets, longer time horizons may permit a higher equity exposure. Determine your financial needs. This affects the kinds of assets that can, if necessary, provide cash flow. Consider the tax ramifications. For various assets, some accounts are more tax efficient than others. Perform scenarios and projections. To see potential results over time, model various allocations. Actively rebalance. Regularly review allocation as objectives and market conditions change. Use target date funds if appropriate. As the goal date gets closer, these automatically alter allocations. Seek aid if necessary. For those who are less comfortable building their own portfolio, a financial advisor can offer advice. The ideal mixture fits your risk tolerance, objectives, and time horizon. In addition to balancing returns across asset classes, it maximizes profits within your comfort range. Your investments may be able to provide outcomes that are in line with your needs by combining in the proper way. When investigating robo-advisor costs and investment menus, keep the following things in mind. Account opening requirements. These might range from $0 to $5,000 or more depending on the platform. Management expense ratios, MARs. These show the annual fee levied on the assets managed, which is normally between 0.25 and 0.50%. Trading commissions. While some platforms don't charge any, others may levy $3, $10 every deal. Investment options. Menus provide thousands of equities and funds in addition to just ETFs. Analyze the expenses and breadth. Tax loss harvesting. For an additional cost, certain robo-advisors offer automated tax optimization. Access to advisors. While many allow unrestricted online access, others don't offer any one-on-one contact. Account features. Evaluate additional benefits like budgeting tools, mobile apps, or socially conscious choices. To find the ideal blend of costs, investments, and features suited to your unique financial position and goals, I'd strongly advise thoroughly comparing different robo-advisors. For a more in-depth comparison of platforms, there are many great internet resources available. Here are some important things to think about when choosing between a robo-advisor and a conventional brokerage. Investment strategy. While brokerages provide more personalized guidance and active trading options, robots employ algorithms and passive investing. Brokerages generally have greater minimums, frequently $1,000 or more. Numerous robo-advisors have a minimum of either $0 or just $100. Fees. Habosh often charge 0.25 to 50% of AUM. Brokerage fees vary more widely depending on trading activity and services used. Customization. Brokerages permit advisor access and manual investment selection. Robots provide pre-made portfolios that are in line with questions. Tax optimization. An important benefit offered by many robo-advisors is automated tax loss harvesting. Brokerage manual supervision is necessary for this. User experience. Habosh place a strong emphasis on apps and the digital world. The quality of a brokerage's platform can vary substantially. Account features. Habosh are just concerned with investing. Brokerages provide more alternatives, such as access to IPOs, margin trading, and banking products. Investor education. Videos and tutorials are offered by Habosh. Full-service brokerages offer tailored assistance. Consider your unique requirements, including as prices, account size, desired engagement, and other services, to decide whether a robo-advisor or more flexible brokerage is the best fit for you. To learn more about and compare online investing systems, check out these useful resources. Investopedia offers in-depth analyses and comparisons of popular brokerages, investment apps, and robo-advisors. Excellent for a general summary of pricing, account minimums, and important features. NerdWallet rates and reviews online brokers and robo-advisors according to fees, account types, trading capabilities, and other factors. Consumer Advocate examines returns, costs, and account options for robo-advisors. Methodology that is useful for comparing platforms. Stockbrokers.com Comprehensive evaluations of more than 15 major online brokerages, including information on usability, commissions, trading resources, and more. Barron's, ranking of the top robo-advisors each year based on costs, assets under management, portfolio customization possibilities, and wealth management services. Money Under 30, reviews of internet brokers and robo-platforms geared toward nascent young investors. Websites for the brokerage sector, comparison tools for account types and investment products can be found on sites like Vanguard, Fidelity, and Charles Schwab. Financial advisor blogs, many advisors provide their perspectives on the pros and downsides of robo versus traditional brokerage and when each may be appropriate. Finding the ideal online investing provider for your unique financial circumstances and goals can be aided by conducting in-depth research across a variety of sources. Please let me know if you require any other suggestions. Here are some useful tools for evaluating the effectiveness of various online investing platforms. Robo Report offers benchmarking information, including as portfolio results, risk measures, fees, and account minimums, on the top robo-advisors. Permits comparing performance side by side. Backend benchmarking monitors and evaluates the performance of several robo-advisor portfolios that include investments in stocks, fixed income, and blended allocations. Asset Builder assesses the effectiveness of tax loss harvesting by robo-advisors on a regular basis. Aids in estimating possible added value. Barron's annual robo-advisor ranking covers top firms' average portfolio performance over 1, 3, and 5 years. Morningstar offers examination of the methods used in robo-advisor portfolio development and quantified historical returns. Yahoo Finance can compare past total return performance for a variety of ETFs that robo-advisors frequently utilize. Broker Check, a program provided by FINRA that displays regulatory information and reported returns on investment accounts held at brokerage houses. Investor.gov, an SEC website that lets users look up and assess the performance of SEC-registered financial advisors. Individual platform websites, a lot of robo-advisors and brokerages offer their portfolio benchmarking and backtesting results on these websites. The most extensive analyses take into account factors other than returns, such as risk-adjusted measures, fees, investment approach, and total services, in addition to returns. The complete picture is shown via comparison across many resources. If you need assistance evaluating any particular platforms, let me know. Online stock market investing. The ticker symbols and flashing numbers. The thrill of watching your selections soar. The prestige of making money off of your market dominance. Stock investing looks like a fun way to quickly accumulate wealth, isn't it? But the unsettling reality is that there are many more heartbreaking losses than magnificent gains. Portfolios are destroyed by extreme volatility. Frauds go undetected and blow out savings. Inexperienced fools risk their savings for nothing. Even the most knowledgeable analysts cannot foresee every crash. What realistic chance does the average Joe have of winning this dangerous game? By ignoring the clamor and hype. With a methodical, careful approach based on reason rather than chance. Investing is now easier to access than ever before thanks to contemporary applications and online brokerages. But simple trades do not equate to simple money. The people who understand the risks involved, save costs, diversify wisely, and follow the plan get the true advantages. To be successful, one must view stocks as partial ownerships in actual companies, not merely as abstract numbers. The market can produce strong long-term growth for your hard-earned money when used in conjunction with education, research, and appropriate expectations. Don't let fear or greed drive you to foolishness. Keep things in perspective and let compounding time do its job. Online investing offers a world of money within your grasp if you keep your cool. But if you gamble carelessly, all you'll get is pain. Knowing the difference and being cautious will help you use the markets to realize your financial goals. Check out these helpful resources to learn more about investing in the stock market online. Investopedia provides in-depth articles, tutorials, and dictionary definitions on all vocabulary and investing-related terminology. Excellent for beginners. TD Ameritrade's free online investing classes include stocks, ETFs, options, mutual funds, and more. Developed in particular for new investors. Morningstar Fundamentals describes how to research companies, evaluate stocks, build portfolios, and lower risk. Vanguard's Investing Education, guidance on creating investment plans, asset allocation, investing in index funds, and regular portfolio evaluations. The Fidelity Learning Center offers interactive modules on a variety of topics, including technical analysis, retirement planning, and stock trading fundamentals. Khan Academy Finance and Capital Markets, video lectures dissecting the basic economic principles of stock investment. Reddit Investing for Beginners, a vibrant forum where investors discuss their knowledge, suggestions, and beginner errors. Stock market simulation games, practice risk-free investing with imaginary money to gain experience. Investment classics such as A Random Walk Down Wall Street that offer enduring financial advice. It is essential to find resources that support long-term, diversified, and risk-aware investing strategies. Please let me know if you need any other recommendations. The following are some of the most typical stock market errors made by new investors. Lack of a plan. Making investment decisions without specific objectives and a well thought out plan frequently results in regret. Acting emotionally. Buying high and selling low at the worst moments happens frequently when fear or greed are allowed to drive trading. Chasing hot stocks, speculating, not investing, involves blindly adhering to hype and daily price fluctuations. Lack of diversification. If you put all of your eggs in just one or two baskets, you run the danger of taking on unneeded firm-specific risks. Using excessive leverage. When the market declines, investing with borrowed funds magnifies losses. Ignoring fees. Even minor costs compounded over time can significantly reduce returns. Attempting to time the market. It is nearly impossible and frequently unsuccessful to foresee market fluctuations. Not reviewing frequently. Without periodic rebalancing and updating, portfolios stray from their goals. Overemphasizing the short term. Prioritizing the long-term compounding effect should be done. Underestimating risk. Stocks have a real potential for loss, which must be taken into consideration when sizing positions. It takes research, focus, and patience to avoid these mistakes. A marathon, not a dash, constitutes wise investing. Gambling and speculation frequently lose out to patient, evidence-based solutions. Here are some pointers for creating a focused, long-term investment plan. Establish defined financial objectives and dates to serve as your plan's compass. Recognize your level of risk tolerance. This will assist you choose how risky or conservative to be with your asset allocation. Decide on your preferred investing approach, active stock selection or passive index investing. Each strategy calls for discipline. Broaden your diversification. Distribute risk across market segments, regions, firm sizes, etc. Automate where you can. Create a timetable for regular contributions and reinvestments. Start modestly. Don't take on more danger than you can handle at first. Establish positions gradually. Reinvest dividends and gains. By investing all earnings, you may let compounding do its magic. Periodic rebalancing. As prices change, maintain target asset weights for the portfolio. Ignore short-term distractions and keep your attention on long-term principles and objectives. Evaluate results at regular intervals, but don't stress over everyday actions. Review performance, but don't obsess. Reflect on mistakes and improve decision-making by keeping a journal. Disciplined investing can be profitable over many years if done with the appropriate attitude of blocking out hype, managing emotions, and creating money gradually. The trick is to be persistent and patient. You can practice risk-free investing with the help of the following stock market simulation games. Investopedia Simulator. Use real market data to trade stocks, ETFs, mutual funds, and other securities. Extremely thorough. Wall Street Survivor. A fun and engaging approach to master the fundamentals of investing. Compete with other people. Market Watch Virtual Stock Exchange. Create a portfolio, keep track of it, and compete for top rankings. On actual prices. How the market works. Trade stocks and options with fictitious money while keeping track of your results. Many universities and colleges use StockTrack for their virtual investing classes. EduStock is a browser-based game that emphasizes foundational research and long-term planning. A sophisticated business simulation known as CAPSIM is frequently utilized in MBA schools. Finding a game that fits your objectives, whether they are mastering the basics, honing your strategy, or trying to climb the leaderboards, is crucial. Setting time restrictions can prevent the virtual fun money portion from influencing your perspective on real-world investing. Numerous online brokers, like TD Ameritrade, also provide paper trading accounts that allow users to simulate trades using fictitious funds and real-time market data. When compared to abstract video games, this might offer a more authentic experience. Here are some recommendations for books on sophisticated investing strategies and ideas beyond the fundamentals. Burton Malkiel's A Random Walk Down Wall Street is a classic work on efficient market theory and passive index investing. The Intelligent Investor by Benjamin Graham, Warren Buffett's mentor's seminal work on value investing strategies. Antti Ilmanen's Expected Returns, an in-depth examination of forecasting future returns for improved portfolio management. Wesley Gray's book Quantitative Value explains how to execute quantitative value investing models methodically. James O'Shaughnessy's What Works on Wall Street examines historical data on the most effective quantitative tactics. Larry Swedrow's The Incredible Shrinking Alpha argues that in competitive markets, passive management is preferable to active management. John Bogle's The Little Book of Common Sense Investing, the founder of Vanguard, promotes investing in low-cost index funds. Pat Dorsey, a Morningstar strategist, focuses on economic moats and competitive advantages in the 5 rules for successful stock investing. Nate Silver's The Signal and the Noise discusses the use of Bayesian probabilistic reasoning in data analysis and prediction. Instead of books pushing bogus technical trading tactics, I would advise concentrating on books that are based on data, testing, and healthy skepticism. Are there any online communities or forums you would recommend for discussing stock market investing? Here are some of the top online groups and discussion forums you should visit to learn more about stock market investing. Reddit. Discussions are frequent in subreddits including r/investing, r/stocks, r/stock market, and r/security analysis. John Bogle, the founder of Vanguard, popularized passive, index fund investment strategies, which are the subject of the Bogleheads Forum. Value Investors Club, an exclusive group that publishes in-depth analyses of investment suggestions from knowledgeable members. Follow thought leaders, financiers, and businesses on Twitter by following at Muslim, at Aswath Damodran, at Alpha Architect, and at Morningstar Inc. Seeking Alpha, active message boards with crowdsourced information on investment news and thoughts. Stock Twits, a platform that combines trading idea discovery with social media for investors. Facebook groups, look for specialized groups on technical analysis, dividends, options trading, etc. LinkedIn groups, a lot of professional groups for finance and investing have active discussions. Discord servers, to communicate ideas in real time, some investors create communities on chat servers. The most valuable groups have robust debates that are based on facts, statistics, and careful analysis. Be skeptical of hype, memes, and sentimental rants. My top suggestions for finding out more about evidence-based investment strategies are listed below. Books. Larry Swedroe's The Evidence-Based Investor, a comprehensive discussion of using financial data in portfolio strategies. Andrew Birkin's Your Complete Guide to Factor-Based Investing explains historical data on the use of factors like value, quality, and momentum. Ben Carlson's A Wealth of Common Sense promotes the use of evidence and simplicity over sophisticated tactics. Podcasts/blogs. The podcast Rational Reminder examines data-driven investment and behavioral finance. Meb Faber Research blog covers quantitative research and financial considerations. The Alpha Architect blog integrates theoretical understanding with doable portfolio methods. Larry Swedroe's use of financial evidence for advisors can be found at the Evidence-Based Investor blog. Online education. Evidence-Based Investing by EDX, online course on data-driven investing and financial analysis. Coursera's Data Analysis for Business, Finance, and Investing course teaches data analysis techniques for use in the financial sector. Behavioral Finance on Udemy, a course addressing investing choices and behavioral psychology. Focusing on tools based on peer-reviewed financial studies rather than speculative theories is crucial. Let me know if you need any additional suggestions for expanding your knowledge of evidence-based investment. The alluring promise of instant wealth. The excitement of trading innovative digital assets. Financial independence dancing in your thoughts. It sounds wonderful to become extremely wealthy by investing in cryptocurrencies, doesn't it? But the sad truth is that many gullible beginners lose their lives while pursuing these impossible goals. Portfolios are vaporized by fierce volatility. Scams that go undetected rob people of their savings. Overnight, careless merchants transform transformative prosperity into agonizing poverty. This perilous market is a haven for both happiness and suffering. Cryptocurrencies, however, are here to stay. And their technology has the potential to change finance. So how can you participate wisely without getting sucked into the craziness of a casino? By ignoring the clamor and commotion. With a sharp, skeptical eye toward extravagant claims. Access to cryptocurrency is now simpler than ever thanks to safe internet platforms. But simple trades do not equate to simple money. Those that take calculated risks, invest in their education, pay as little as possible in fees, and follow a strict strategy reap the true benefits. To succeed, one must view cryptocurrencies as speculative investments rather than as magical free money makers. Digital currencies have the potential to yield significant profits when used with a well-balanced portfolio, a long-term outlook, and realistic expectations. Don't let fear or greed drive you to irrational extremes. Keep things in perspective and gradually strengthen your positions. When used wisely, online cryptocurrency can greatly increase your gains. Your financial aspirations will be destroyed by careless gaming. With caution and knowledge of the differences, you may make your place in this new digital gold rush. Here are some of the finest websites for buying cryptocurrency that come highly recommended. Coinbase, one of the most well-known and user-friendly cryptocurrency exchanges. Enables the use of Bitcoin, Ethereum, and other well-known cryptocurrencies. Gemini, the Winklevoss twins launched this regulated exchange. Offers a wide range of trading alternatives and strong security. Voyager, an intuitive app with a commission-free trading focus. Suitable for novice investors. Robinhood, a popular trading software that provides simple cryptocurrency trading in addition to stocks and ETFs. eToro, a social trading platform for mimicking the portfolios of professionals. Experience suitable for beginners. Crypto.com, an all-in-one cryptocurrency marketplace for purchasing, selling, trading, and spending. CoinMama, almost any countries can buy cryptocurrency with this site using credit/debit cards or bank transfers. BlockFi, receives and pays interest on cryptocurrency holdings. A distinct technique to generate passive income. Hardware wallets like Trezor and Ledger, cold storage for people who take security seriously. I'd suggest searching for interfaces that are appropriate for your level of proficiency, cheap price structures, strong security features, and a track record of dependability. Perform extensive independent research before selecting a platform. Here are some errors that new Bitcoin investors frequently make. Investing more money than they can afford to lose. Since cryptocurrencies are so speculative and unpredictable, this is a big no-no. Never invest more than you can afford to lose. FOMO buying at the top. Avoid following sharp price increases. Instead of purchasing everything at once, think about dollar cost averaging. Lack of rigorous study. Before investing, learn how cryptocurrency initiatives operate. Not just the latest trend. Why keeping currencies on exchanges for an extended period of time raises the danger of theft and hacking. Utilize a safe wallet. Improper storage practices. Online wallets, exchanges, and mobile wallets are more prone to hackers. To retain bigger quantities, use cold storage. Never share your wallet's private keys with anyone. Many frauds attempt to deceive investors into handing up their money. Losing private keys. Irrecoverable losses may result from failing to securely back up wallets and seed phrases. Not paying taxes. Profits from cryptocurrencies are taxed. Report any capital gains or losses. Trading too frequently. Frequent trading incurs costs and frequently performs worse than buy and hold methods. Disregarding security protocols. To prevent intrusions, procedures like 2FA and strong, unique passwords are essential. Before making a sizable financial investment, one must exercise caution, be skeptical, and complete research on secure cryptocurrency best practices. Here are some tips for educating yourself on cryptocurrency investing. To learn the fundamentals, read beginner's guidelines on websites like Coinbase, Gemini, and Kraken. Learn about blockchain technology and wallets by enrolling in free online courses offered by websites like Udacity, Coursera, and edX. To receive a variety of viewpoints, follow crypto thought leaders on Twitter and YouTube like Andreas Antonopoulos, Charles Hoskinson, and Michael Saylor. To remain up to current on news and analysis, listen to crypto podcasts like Unchained, Unconfirmed, and Bankless. Participate in communities like r/cryptocurrency and r/crypto_com on Reddit to talk about ideas with other investors. To research prices, market caps, volume, and trends, use programs like CoinMarketCap and CoinGecko. Develop your critical reading skills when reading white papers on new coins and crypto projects. Begin trading in modest increments to get a feel for wallets, exchanges, and volatility. To increase your technical understanding of the blockchain, read classics like Mastering Bitcoin by Andreas Antonopoulos. Always be suspicious of hype and concentrate on cryptocurrency projects with strong technical foundations and vibrant developer ecosystems. Invest in continuing learning rather than simply a one-time crash session because the field is ever changing. Start taking security and safety precautions right away. The following are some essential security attributes to search for in Bitcoin trading platforms. Two-factor authentication. 2FA- This provides an additional layer of security over just using a password to log in. Platforms should support 2FA with physical keys or an authenticator software. Offline cold storage. Platforms should offer offline/air-gapped cold storage options away from internet access for long-term holdings. As a result, hacking is prevented. Insurance. In the event of a breach, leading exchanges insure a portion of their holdings. For account holders, this offers repayment protection up to coverage limits. Asset segregation. Reputable platforms keep consumer funds apart from company funds in segregated accounts. As a result, mixing is avoided. Encrypted private keys. To preserve wallet private keys, which regulate access to coins, platforms should adopt encryption and severely restrict staff access. Multi-signature support. As a security mechanism, wallets can demand several signatures before moving holdings. Look for platforms that can handle this cutting-edge protocol. Mandatory PINs and passwords. Accessing accounts and starting transactions should require both strong passwords and mobile PINs. Self-custody choices. Permits shifting holdings to a private wallet in which the user has direct access to the private keys. Third-party risks are removed as a result. Security audits. Regular, impartial audits conducted by companies like Chainalysis confirm platform security procedures for customers. Why programs that reward ethical hackers for finding vulnerabilities help to increase security. Are there any platforms that offer a wider variety of cryptocurrencies to invest in? The following websites provide access to a wide range of cryptocurrencies. Binance offers more than 500 alternative coins. Largest cryptocurrency exchange in the world by trading volume. KuCoin, up to 200 cryptocurrencies can be traded here. A lot of early coins. Originating in Hong Kong. OKX, formerly known as OKEX. 400 plus coins are available. Includes trading on margin and derivatives. Crypto.com offers more than 250 currencies and tokens for sale or trade. Coinbase Pro. Coinbase's professional version is geared toward active traders. 150 or more cryptocurrencies. Kraken consistently receives great marks for UX and security. Excellent cryptocurrency options and liquidity. Gate.io, numerous alternative currencies and DeFi tokens. Favored by Chinese traders. One of the biggest international trading platforms is Bitfinex. More than 200 coins and sophisticated trading features. Gemini is a licensed US exchange that offers more than 60 coins. Reputable security and a slick user experience. FTX, focused on derivatives, although spot trading also provides access to over 250 altcoins. Finding an exchange that offers the precise currencies you desire at reasonable costs is something I'd suggest doing while keeping security as the top concern. A lot of exchanges also grant early access to new ecos and tokens. Do you have any recommendations for resources to help me learn more about investing in cryptocurrencies? Here are some of my top suggestions for learning more about investing in cryptocurrencies. Books. Andreas Antonopoulos, Mastering Bitcoin. Excellent technical explanation of Bitcoin and blockchain's underlying cryptography and mechanics. The Bitcoin Standard by Seyfedin Amus explains the philosophical, historical, and economic contexts that influence the creation of Bitcoin. Podcasts. Unchained, which conducts weekly interviews with leading figures in blockchain and cryptocurrency. Excellent summaries of the news and projects. Bankless describes central bank monetary policy and decentralized finance. YouTube channels. Coin Bureau provides analysis of news and cryptocurrencies in an approachable manner for beginners. Finematics provides clear animated films that explain cryptographic topics. Excellent for the fundamentals. Online education. Coursera's excellent introductory course on Bitcoin and cryptocurrencies from UC Berkeley. Blockchain and cryptocurrency explained on Udemy, more thorough curriculum with completion certificate. Newsletters. CoinDesk, comprehensive cryptocurrency news, analysis, and how-to articles. Messari examines cutting-edge trends and cryptographic initiatives in depth. The following are a few of the top online blockchain technology courses. Blockchain Basics from the University of California, Berkeley, EDX, a good primer on the principles of blockchain. A thorough curriculum encompassing ideas, applications, design, and more is the Blockchain Revolution specialization, Coursera. Focusing on actual blockchain business use cases, blockchain technology, business innovation and application, EDX, is a course. Basics, Applications, and Limitations of Blockchain and FinTech, Wharton School, a blockchain course on EDX with a focus on finance. Developer for the IBM Blockchain Foundation, Cognitive class. Free blockchain network building training utilizing IBM technologies. Framework, consequences, and myths are covered in the EDX course Blockchain, understanding its uses and consequences. The Linux Foundation's Introduction of Blockchain, Foundations and Use Cases, EDX. University of Nicosia Distributed Ledgers, Master's Level Certificate Program with in-depth study. I would advise beginning with a thorough basic level course to fully understand the fundamental ideas, technological underpinnings, and blockchain applications. From there, you can take courses that are more specialized and technically inclined and that concentrate on developing, coding, and business applications.